What's going on, everybody? It's Stas here. Welcome back to another video. So some big changes were made to my M1 Finance portfolio, and as you guys know, this is a portfolio I started strictly for the YouTube channel, and I'm being super transparent with it. I'm showing you guys everything I'm buying, everything I'm selling, the good days, the bad days, changes I'm making, and let me tell you again, some big changes were made to this portfolio, and nothing too crazy, but I ended up selling some positions. I added one position, rebalanced my portfolio a bit. So let's just get right into it. And as of now, it is sitting a little bit over $11,500. And again, I started this for the YouTube channel from $0 all the way to where it is right now. I'll link that playlist down below in the description box if you guys have not seen that and haven't seen the previous episodes. And now it's sitting up again above 11,500, and currently on the day we're up over 2%. Strong day today, up over $241 in market gains. And let's just look quickly at my holdings, and then I'll run through the changes for those of you guys that are interested, which if you're watching this, you're probably interested, right? So I have Google, MasterCard, Disney, Johnson & Johnson, Pepsi, AbbVie, Amazon, ExxonMobil, PayPal, Microsoft, Procter & Gamble, Starbucks, Barrick Gold, which is one of the new ones I added. I'll go over that in a little bit. Raytheon, and Altria, guys. That's ticker symbol M. And quickly, let me show you guys how the portfolio has been doing. We saw today it's up $241, but let's look at the week, the month, the quarter, the year, all that good stuff. So 1 week, it's up $68. We made about $8 in dividends, 59 in capital gains there, market gains, however you want to call it. And the monthly, in the 1 month time period, we made $500 in market gains, $31 in dividends. So this portfolio, it's not making thousands of dollars per month in dividends, but hey, $30 a month, 20, 25 a month, that's pretty decent. And of course, I'm reinvesting all of that into this portfolio. I'm not taking any money out. I'm only putting money in, reinvesting, investing, reinvesting. You guys know the cycle. And when it comes to the quarter, we've made $900 in the past quarter, $825 in market gains, $81 in earned dividends. In the past year, we're up $2,000, $1,850 in market gains, and $180 in earned dividends. And overall, we're up about $1,900, $200 in dividends, and $1,700 in market gains. So that's how the portfolio has been doing over the past couple of different time periods, as you guys saw. And now let's talk about some of these dividend stocks that I've been buying, what big change I made, big changes, multiple changes to this portfolio. So let's look at that right now. Okay, guys, look, here it is, March 1st, 2021. And this is my activities tab for everything I'm doing here in M1 Finance. And you guys can see the dividends, the buys, the sells, all that stuff as of late. And you notice today, March 1st, a good amount of buying and selling occurred. In fact, $3,000 worth of stocks were sold. And if I click this, you guys can see the details here. Let me minimize my face to make sure, or let me just move my face, or maybe I could just push it down here a little bit so you guys can see what I ended up doing today. So look at this. We sold a bunch of different stocks and ETFs, and hear me out. There's a reason why I did this. DGRO, that was my number 1 holding. I ended up selling out of that, took profits on that. Realty Income, I ended up getting out of that. ARKK, sold that, took a good profit on that, guys. I was buying that in the 90s in this account, sold out when it was 140 or something like that, so it took a nice profit there. AT&T cut out of that, VEA cut out of that, and McDonald's I also cut out of that position as well. And I wasn't necessarily down on any of these. I mean, AT&T Realty, I think I was down a bit, and Realty Income, I was down a bit, but that's not the reason why I sold. The reason why I sold is because I feel like overall this portfolio was getting a bit too fatty. I don't know if that's even a saying here, but I wanted to cut the fat off of the portfolio. 20 holdings is what it had. I mean, 20 holdings, guys, and this is not $1 million portfolio. This is about $11,000, which is still a good amount of money. I mean, I'm not shaming $11,000, of course not. It's a good amount of money, but I feel like 20 holdings for $11,000 is a bit too much. So I figured, let me cut some of the ones that I wasn't too sure of. I mean, I love all of these companies, don't get me wrong, but I don't think the ones that I cut out of, they didn't fit this portfolio. And it doesn't mean that they're bad stocks, bad ETFs. In fact, I own these. This is a big reason why I sold out of 2 of these. I own these, 3 of these actually, in other accounts. I mean, I own DGRO in another account. I own VEA. So I figured, let me just sell out of it in this account and focus more on the individual names. And ARK, ARKK, I don't own, so I'm completely out of that one. I don't own that in other accounts. Realty Income, I didn't own this in other accounts either, and I figured I enjoy the dividends from them. It was great the past couple of months, and the way that commercial real estate is looking in the next couple of years, it's a bit foggy for me. I'm not as confident as I was when I got into Realty Income, so that kind of changed the way I'm viewing it, and I could be wrong, but for me, I wanted to just sell out of it and reinvest money elsewhere. And for McDonald's, I own this in another account, so I figured, let me just sell out of that and put the money elsewhere. And you guys can see all of the stocks that I took this $3,000 from, roughly, that I sold worth of stocks today, where that money went in terms of buying. I ended up buying $330 of Disney. That's at $192. I bought $138 of PayPal. So I pretty much sprinkled it across the portfolio. I mean, $150 in Amazon, $165 in Microsoft, $280 in J&J, $24 of Raytheon there. Added $500 to my Google position because that is now a 10% goal weighting of this portfolio. Google is, and you might think that's a bit too much, but for me, I'm comfortable with that. The way I'm looking at Google, Alphabet, I love this company. Ended up buying more of MasterCard, $315, Pepsi, $145, which Pepsi, guys, was pretty beaten down. It's been beaten down. Same with Procter & Gamble. I bought $260 of Procter & Gamble, $80 of Starbucks, $104 of Altria. And you guys can see here, I added a position, and that position is Barrick Gold, ticker symbol GOLD, and I cut 6 positions out, right? So that went from 20, I went from 20 positions to 14 positions, and now with this Barrick buy, I'm back to 15, so I'm up to 15, which I feel a lot more comfortable with, considering, again, this is a $11,000 portfolio, and who knows, as it gets bigger, 50,000, 100,000 plus, I might add more holdings to it, then we'll see. Heck, I might even sell out of some of these holdings. And the ones that I've been buying and that I still own, things are subject to change. The market, nobody knows what's going to happen, so things are always subject to change. And the reason why I added Barrick Gold, you guys can see here, I bought 35 shares at $19 today, is because I'm viewing this as a contrarian play. I mean, a lot of people now are focusing on the tech stocks, the ARK Invest stocks, all those, hyped up speculative plays that are out there. And don't get me wrong, those are great. You can make a lot of money in those. But I feel like a lot of people are disregarding the oil stocks, which is completely different from Barrick Gold. And I was talking about the oil stocks a couple weeks ago. I mean, I bought Exxon at 45. Now it's sitting at 57. I think a lot of people were ignoring the oil stocks, a lot of the turnaround plays, and gold stocks. I think commodities are bound to see a run. I mean, we're already seeing oil up. We're seeing some other commodities up. I think gold and silver are lagging a bit, but they're due for a big pop. And who benefits from a rise in gold? Obviously, people that have gold, but gold miners, they're a leveraged way to play gold. And I figured I have gold. I've been buying individual coins, gold bullion, all that. Not too much, though. Not too much of my overall portfolio, but I have a nice little chunk, right? And I figure since I'm buying gold, I might as well add a stock, which if you guys take a look at the chart, I'll put a screenshot right here of Barrick Gold. I mean, it hit highs of $32, $33 a couple months ago. Now it's down 30 plus, 40 plus % from that point, sitting at 18, 19 bucks. The dividend is about 2%, so there's a decent dividend there, and they're growing the dividend at a nice clip. I think the 5-year, I'm not going to quote it because I don't remember off the top of my head, but I'll put a screenshot here. The 5-year compounded annual growth rate is pretty solid. So I like this. It's more of a contrarian play, and it's a play on gold, which I'm already buying it, and I think gold's going to do well. So I might as well buy a stock as well that I think could benefit from the rise in the gold prices and the money printing, which is devaluing the dollar. You guys know what's been going on. And I mean, look at the new weightings of my portfolio. Now I'm putting more focus on the top couple of names, although the lowest holding here has 5% weight, which is still a good amount. So the top couple have about 10 to 7 to 8%, 6% weighting of my portfolio. Like I said earlier, Google's about 10%. Disney is now 8%. MasterCard's 8%. J&J's 8%. Pepsi 7%. AbbVie 6%. Amazon 7%. And this goes along with what I've been talking about, guys. Have that core base, those core holdings, that foundation. And this is pretty much my foundation. You know, Google, Disney, MasterCard, J&J, Pepsi, AbbVie, Amazon. All of these stocks are foundational, and I own them in this portfolio. And again, I have other long-term accounts where I have more of the same stocks, some different stocks. I have that VEA ETF that I cut from this portfolio. Same with DGRO. I cut that out of this portfolio. I still have it in other accounts. And same with McDonald's. So yeah, I mean, that's pretty much it. Don't want to keep you guys too long. I just wanted to update you all on dividend stocks I'm buying, what I've been doing with this portfolio. A pretty big change as I sold 6 positions, added 1. Now I'm at 15 overall. And this is kind of what I'm going to be riding with these next couple of months. I mean, I feel like I've made my changes. I've repositioned a bit, locked some profits, and this is what I'm rolling with. And I'll probably just add more money to these existing positions if we were to see a 10, 15, 20% drop in the stock market. So that's what I'm doing, guys. Let me know your thoughts down below. Hit that like button. Make sure to subscribe to the channel. And if you guys want some free money from M1 Finance, check out my link down below. Simply open up an account, deposit any amount of money, and you get $10 free to invest in. You could also get $2 from WeBull. That's a different brokerage, but you can still get 2 free stocks. Those are valued up to $1,600. Link down below. And you can check out the Patreon, which we're putting in a lot of work in that Patreon. Buy and sell alerts, call outs, morning update videos. I mean, so far today, we've called out Open Door, which is doing pretty well. And we talked about the Bitcoin plays on Patreon, Marathon Patent Group, and Riot. Those are both up about 6 to 10%, depending on when you're watching this from where I called it out. And yeah, I mean, check out that Patreon, linked right down below. So I'll catch you all in the next video. Thanks for watching. As always, stay safe out there, guys. Keep crushing the markets. Peace out.